and the reverse mortgage. Pretty much everyone has their own preconceived notion about what that might be, and I mean it's a loan that's now been around for about 30 years, and the intent of the loan was to create a program for the senior community or for 62 and older homeowners to be able to, start to say subsidized retirement, but really just allow them to be able to age in place.
Sure.
To be able to, have their home. Most people have most of their wealth in their home and the equity of their home. And of course, if they're paying their mortgage payment every month, their primary residence is more a liability than an asset.
Right.
But this essentially would turn their primary residence into an asset where they would be able to access some equity, be able to have some more security for the future, and really be able to, protect their retirement, whether they've planned for retirement already or they haven't. This is essentially a ability to, if they haven't planned, this is another option to, not have to make a mortgage payment anymore, have some access to equity within their primary residence. Or if they have planned for retirement or they have investment portfolio, then it could be used in association or in addition to their retirement. So it's really a loan that's evolved quite a bit over the years. And when they first implemented it about 30 years ago in the late 80s, it was something that wasn't really not necessarily a well thought out loan, but it was a program that didn't have a lot of protections for the borrower, the lender, FHA, HUD, if they were even involved that much back then. That's to be determined. But it was something that, that's kind of what I guess spurred on some of the myths about the reverse mortgage that we all know and love today, right? The fact that most people think that they're giving the home to the bank when they do a reverse mortgage, but not true. Yes. So the age has always been 62 or older homeowner. So it's definitely someone in their 60s, 70s, 80s, 90s. There's no cap on the age.
Yeah.
And actually in the paperwork of the reverse mortgage, it says someone can live into the age of 150 years old and still be protected and still live in their primary residence and not have to pay the loan back or anything like that. So there's no cap. It's someone who has equity in their home. They can have a mortgage currently, or they can have a free and clear home. It doesn't matter. What matters is the fact that, what equity they do have, do they qualify based on the percentage that they qualify based on their age. So for instance, someone who's 70 years old, they can borrow up to 47 to 48% of the FHA maximum which is just below $680,000, which is the maximum amount that FHA will use for a value on a home. So it's someone with equity, and they're, like I said, over 62. Okay. There are some newer proprietary or kind of private products coming out that might reduce the age to 60. Mm-hmm. So I think some of those lenders are trying to kind of attack and serve the 55 plus communities.
Gotcha.
So we'll kind of see where that goes. But because I think some of the changes that have recently happened in the last couple of years with FHA and HUD and the kind of the reductions of the loan to value percentages and some of the other guidelines, some of these other proprietary products out, because really FHA can only serve a certain amount of people and demographic, and they're not going to start lending huge loan amounts and to a lot of people. So that's where we'll kind of see some of these more private products come out, and because there's, like I said, there's a lot of people that are going to be in their 60s, 70s, and 80s here in the coming years, and so there's a lot of people that have not prepared for retirement. But like I said, if they have prepared for retirement, this can be used in utilization with it.